Hello traders! Today we're going to take a look at some important market movements. We'll cover the US dollar index, crude oil, gold, and currency pairs like the Aussie dollar and the dollar yen. Let's dive right into it. The US dollar index recently surged to a nearly 2-year high, reaching 109.97. This rise is mainly driven by inflation concerns and a stronger than expected jobs report, which has pushed back expectations for Federal Reserve rate cuts. Investors are now pricing in a delay in rate cuts, supporting demand for the dollar. With the US economy showing resilience compared to other major economies and the Fed's stance on slower rate cuts, the dollar remains strong. Technically, the index is above 109 and could continue to rise towards 110 and even 111. However, the RSI is in overbought territory, so we might see a short-term pullback before any further gains. Oil prices climbed more than 3% last week, hitting $77, driven by supply concerns from US sanctions on Russian oil and a cold start to the year in the Northern Hemisphere, increasing demand for heating fuels. These factors are supporting the upward movements in oil prices. If oil can break above the $77 resistance level, we might see targets at 78.78 and 79.86. On the downside, key support levels to watch are 73.8 and 72.35. While the outlook remains bullish, oil traders should stay cautious about any geopolitical shifts. Gold has been reacting to mixed signals in the market. After a drop to $2,663 an ounce following stronger than expected US jobs data, gold quickly rebounded, ending the week near $2,698. The continued uncertainty surrounding inflation and geopolitical risks is keeping gold in demand as a safe haven asset. If gold can break above $2,692, it could challenge the $2,700 mark and even $2,726. However, if it falls back below $2,661, support could come in at $2,633 and $2,600. The outlook remains positive for gold, especially with continued inflation fears and geopolitical tensions. Looking at the Australian dollar, the Aussie dollar has been struggling, falling below the 0.617 level to a low of 0.6138. This decline is largely due to the strength of the US dollar, boosted by high treasury yields and a hawkish Federal Reserve. Meanwhile, the Reserve Bank of Australia is facing pressure to cut rates, and Australia's inflation is weakening, which adds to the bearish outlook for the Aussie. From a technical perspective, breaking below 0.613 could trigger further declines, with the next major support at 0.6. Any short-term bounce may face resistance near 0.62 and 0.63. Finally, the dollar yen reached a 6-month high of 158.88 last week after strong US jobs data. Despite inflation in Japan, the Bank of Japan's cautious approach to tightening keeps the yen weak against the US dollar. The widening gap between US and Japanese yields is also supporting the dollar. If the dollar yen breaks above 158.88, it could target the 159 and 160 levels. On the downside, key support lies around 156.98 and 156. Overall, the outlook for the dollar yen remains bullish as long as the Fed stays hawkish and the Bank of Japan maintains its stance. To summarize, the US dollar is on a strong run, driven by inflation concerns and a delay in Fed rate cuts. Oil prices are climbing, supported by geopolitical risks and weather disruptions. Gold remains attractive amid safe haven demand, while the AUD/USD continues to struggle with a stronger US dollar. Finally, USD/JPY is benefiting from widening yield differentials. That's all for today. If you found this helpful, be sure to like, share, and subscribe for more insights. Thanks for watching, and we'll see you in the next video. Happy trading, everyone.